So pair number two we're going to look at is going to be the Euro Yen. And this was a pair that we looked at in last week's video. This was a trade that I involved myself in. This was a trade that was a very good lesson for our traders on the platform, not only in being patient with your reason for entry and waiting for the double top, but a very good level in proper stop placement. Because I'll tell you what, if we go down to the 240 chart, the 4-hour chart where this trade was executed on, you could see that our double top was invalidated. All right, we had our official double top right here. We then invalidated it with the higher high, higher close. We pushed up a little, scaring some traders away, but because we had stops in the right location, we were not harmed. And again, it gave a good lesson on not only proper stop placement, but also trading psychology, because that could be very difficult to deal with when you see a price action going in the opposite direction. Is one, a hard thing in its own right, but two, to see it put in that type of invalidation of the level that you looked at, it could be very hard to stick with that trade. But I always say this, right? Patience pays. So for those who stick to the rules, for those who are patient in their execution, usually the market pays you dividends, while those who rush and make mistakes, well, we all know how that ends. But a few things that we're looking for here outside of this trade, right? Bigger picture, we have a few potential advanced patterns forming, and I actually don't know what these are. I was eyeballing them. I haven't drawn in my fibs yet, but I thought this was a perfect example to kind of show off the power of our pattern recognition tool here, right? Because I know this, right? This is going to be our X to A. So this is going to be the starting leg of our pattern, our swing high to swing low. We call this an impulse leg. There should be no brainer about if this is an impulse leg or not. It's a clear break of structure, a clear impulsive move. 100 out of 100 traders should see this, right? We also have a secondary leg that retraces back. This is going to be our A to B. Now, what we want to do with our A to B is we want to measure our Fibonacci retracement. We want to see what Fibonacci retracement level does that come to. If we come to a 50%, it means one thing. If it comes to a 382, it means another thing. If it comes to a 618, it means another thing. If it comes to a 786, it means another thing. This is the cool thing about having rules, and this is why so many newer traders flock to patterns, not because they're super great or anything like that, not because they're the best way to trade, but it's very easy to stay structured. It eliminates a lot of your ability to think. And as newer traders, thinking is usually a bad thing because we overthink or underthink or emotionally think, and that's what gets us into trouble. These are, for the most part, black and white, aside from obviously needing the ability to read a price chart, which is necessary in whatever strategy you would follow. But what gets interesting is this, right? If we take our next Fibonacci retracement, we know we have an X to A, A to B. We now want to measure out our B to C. In order for this to be a Gartley pattern, we need a very specific Fibonacci requirement, right? We need that 618 to be hit. And depending on how you draw your fibs, it may or may not be hit. Now, it looks like on my chart, we hit no matter what, but we know that different charts are different. Sometimes data is going to be different depending on where you go to. So it's very important that you have this level precise. Something I like doing to really just save me time instead of kind of eyeballing this and making sure I'm right on the lows here, making sure I'm right on the highs here, is I like using our pattern recognition tool. I like drawing it in manually. There is a mode where it will draw it out for you, but I'm kind of old school. I like doing the work myself. I don't know why that is. Probably some deep psychological reason down low, but I like doing the work myself. So I like drawing it out, X to A, A to B. And I can go down, and it's going to lock into this candlestick, and it's going to show me we are at a 62.8 Fibonacci retracement. My minimum requirement is a 61.8. So boom, we've done it. This is going to be a legit C leg for me, and it saves me the trouble of kind of locating each candle and clicking on it like this and figuring out the highs and the lows, and time saving is great in my line of work. So we know that this is going to be a legit C leg, which means I can project a D leg. And if we were to return to this level up here, 117.50s, then we are going to have a bearish Gartley pattern, a deeper bearish Gartley pattern because of how deep my B leg is. And you can see the risk reward is going to be pretty nice on here. I'll give it to you in a little bit. Looking at about a 2-to-1 risk reward, about 60 pips of risk, almost 120 pips of potential target to target one. not bad. That's the type of trade I want to be in. A 2-to-1 risk reward with a win percentage that is on my side. That's a good formula to making money in the market if you can do it and not sabotage yourself. Something else this could be as well, and we need to retrace a little bit for this first. I don't even know if I want to draw this on. Yeah, we haven't hit it yet. I was going to say something else we can do, and we can revisit this during the week, is we could have a bullish Gartley as well. So X to A to B. You can see we have not hit that 618, so that needs to be hit first in order for us to have a legit C leg. But if we do, we're going to have a decompletion right down here. So that could be another bullish reason. Again, I'm not too concerned with any of these right now because I'm already short. So I'm hoping that this little retest of our structure cluster right here holds and we can continue on our way down. But certainly a few opportunities on the radar for those who aren't involved in this trade and for those who are pattern traders, especially on the higher time frames here. All right, next we're going to go to the pound yen, the beast. This was another pair that we spoke about last week. We broke down this chart, so I'm not going to do it from the top down again, because if you've been following these videos each and every week, and if you've been following us in the live room each and every day, whether live or on the recorded sessions, you should know exactly what was on our radar and why we were making the prediction that we did. But if you remember, to go along with that prediction, we had an advanced pattern formation. We had a bearish pattern. That pattern came down and we did continue, and now we have put in multiple lower low, lower closes. So you can see we have a pattern of breaking structure. VS1 level broken, VS1 level broken, VS1 level broken. And each time it breaks, the market does the same thing, right? Before pushing down, right? This is the basics of how price action moves. And if you can understand these concepts, it puts you in a very good position, right? We extend, we break structure, we retrace. Look left, structure leaves clues. Again, there's a little pattern in here as well. This was the bat pattern from last week, which rolled over spectacularly. Last week was an amazing. I'll pause for a little bit. I got this question the other day. It was hilarious on Facebook, and somebody was asking me, "Hey, Keel, how's trading been during these COVID times?" And I was like, "Amazing." It was a quick answer, right? It must have been on Facebook or on my page manager something. Amazing. It was like, is that sarcasm or actually amazing? I'm like, no. No joking. Trading has been amazing. Last week was amazing. The week before that was amazing. Trading has been good. And the reason for that is this, right? As traders, we're a little bit different than investors, right? Investors, you're kind of taking a personal long-term bias in something, right? That's why you see most investors are long. It's kind of frowned upon to short the market as an investor, at least not as much as back in the day, but still, you're most likely investing in something looking for gains, looking for appreciation. Trading is different. Trading is more like mercenaries, right? We don't really care if the market's getting long. We don't really care if the market's going short. We just want to be involved in that direction. Forex trading is even more mercenary-like because there is no long or short, right? If I am long the pound dollar, it means or the pound yen, I'm buying the pound, I'm selling the yen. If I'm short the pound yen, I am buying the yen, I'm selling the pound. So it's never really buying or selling. It's just the relationship between the two. But the point is, when you have global economies in kind of the state that they are in, the volatility picks up in the market. And, a lot of the markets are moving off of emotional decisions, right? People moving money around and whatnot. And it's causing directional movement. And that's all we need as traders, right? All we need is movement. The worst thing that we can have as traders is for the markets to be agreed upon, right? Stagnant movement where it's going sideways, right? That's typically what you get in the summers. And that's why we say summers are slow, right? Because there's nothing we can do if the market's going sideways. But when the market's moving, whether it's up or down, it opens up opportunities to exploit our edge in the market. And if we're doing our job as traders, while consistently exploiting that edge, that's going to consistently bring us profit. And we've been able to do that very, 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 very well since March or so. So it's been a good period. And that continues here with the pound yen. Again, going kind of back into the topic I did before we got into the rant, right? Next level of structure, right? We extended past it. We invalidated it. What did we do? We retraced, right? Currently, we just put in a lower low, lower close. We had a nice double bottom right here. Broken close below that double bottom. Broken close below this wick we were paying attention to on the higher time frame. So what do you think we should expect the market to do now?